Welcome to Tony Byrne's View with news you can use. Tony has over 32 years of experience as a chartered financial planner and wealth manager. Tony's passion is to help you retire early and live the life of your dreams with no financial worries. Now to today's episode.
4 threats to your wealth and what to do about them right now. Forget a double whammy. We are in for a quadruple whammy very soon. What am I talking about? The 4 imminent threats are energy price increases, interest rate rises, taxation increases and inflation rises. These are very real threats to your wealth which you should tackle as soon as possible. So what should you do about it? Energy. The government cap on how much energy companies can charge will end on 1st of April. This isn't an April Fool's joke. Prices are set to rise by 54% for many consumers. This is no laughing matter. In the short term, there is little you can do about it, but Martin Lewis of MoneySavingExpert.com has recommended opting for the variable price rate currently, as the fixed rate deals are poor value for money at the moment, and energy prices are likely to fall from their current high levels. So check this out on MoneySavingExpert.com. In the longer term, you should seriously consider installing solar panels, unless you already have them, of course. In addition, you might like to consider installing a battery to store the energy you produce. A client of ours has done this and he claims his electricity bills are now extremely low. Worth considering. Interest rates. When interest rates rise, it is best not to invest in assets such as corporate bonds and government securities because their values will fall inevitably. A rise in interest rates to just 2.5% could lead to bond prices falling by 30%. So reduce or eliminate your investment in bonds. Final salary pension transfer values will also fall, especially if interest rates rise by 2 to 3%. A similar fall in values to that of bonds wouldn't be at all surprising if this were to happen. So if you're seriously considering transferring your final salary pension, just be aware of this, as it will no doubt affect your decision. If you have a mortgage, consider switching to a 5-year fixed rate at about 2%. Based on current CPI inflation of 5.4%, you will be repaying your mortgage with depreciated money. Hence, you will be saving money in real terms, in other words, inflation adjusted. Taxation. Employers and employees' national insurance will rise by 1.25% each in April, and dividends will be taxed an extra 1.25% too. It may not sound much, but percentage-wise, these are very large increases. If you run your own business, limit your salary to about £8,000 a year and pay yourself dividends. Pay as much as you and your company can afford before 5th of April to avoid the dividend tax increase. If you are employed and you're due a bonus, ask your employer to pay it to you before 5th of April. You can change your car to an electric one, which is far cheaper to maintain than a diesel or petrol car. If you are lucky enough to be given a company car, make sure it is a 100% electric car, in other words, zero CO2 emissions. Then the benefit in kind taxation is extremely low at 1% of the value of the car when it was first registered. Do bear in mind that if your overall taxable income is above about £50,000 a year, you will pay higher rate tax, which will negate the national insurance savings. Tax shelter as much money as you can into tax-advantaged investments such as pensions and ISAs, which receive dividends tax-free. Inflation. Inflation is soaring and is about to get even worse. In respect of your investments, it is best to invest in real assets such as property, shares, commodities, gold, etc. when inflation rises, as these assets are historically good hedges against inflation. As for expenditure, it is difficult to avoid rising prices altogether, but you can always adjust your spending and lifestyle, even if it is only for a temporary period of time. Remember, everyone has a personal inflation rate. You can reduce your spending on highly inflated items, for example. You can reduce your spending altogether. Economise until inflation subsides, then spend more. As mentioned above, you can change your car to an electric one, which is far cheaper to maintain than a diesel or petrol car. It will cost far less to own and run if it is a company car too. Solar panels and a battery will substantially reduce your electricity costs as well. Apart from reducing expenditure, you can also increase your income. So consider creating second incomes, or side hustles as they are now known. Concentrate on passive income such as from rent, dividends and business. Don't let these 4 threats get you down. Create your own plan and action it. You know it makes sense.
Thank you for listening to today's episode. If you enjoyed it, don't forget to share it with your friends and family. For more information, head to www.wealthandtax.co.uk.